Abha.
No, but I just want to understand, Udayan, that a lot of these group companies, they're not under brokerage coverages. They've not been picked up by mutual funds. How is he going to do this, in the sense that tomorrow, even if you're restoring relationships right now, and you come up with other offerings across group companies, what is the kind of interest level that you're going to see? And there's no clear visibility on that in the immediate term as we look for this to kind of resolve.
No, raising expansion capital I think will be difficult for Gautam Adani right now, because internationally the doors are closing, as you're seeing one every day with Citigroup and Credit Suisse and all of that. And global institutions tend to move in a pack. If two are doing it, two more will do it, and I don't think his bonds will be any good in the near term. Raising money in the Indian market will be very difficult as well, because I think it will be a brave banker who sanctions Adani loan at this point in time with the way the news flow is. So where does he raise the capital from? But now, the thing is a question of liquidity. You can stall expansion projects at this point in time. But I think if there is a liquidity constraint which comes in, then it's going to be a tricky one. And I actually don't buy this argument about him having assets which can be liquidated at any point, because liquidating an asset overnight is not that easy to raise liquidity capital.
Right.
He does have assets. But the question of assets also takes me back a few years to the Anil Ambani episode. Because I'm not suggesting for a moment that this is an Anil Ambani situation. At this point, it could well turn out to be, but at this point we cannot say that. But when this Anil Ambani unwinding began, people said, what is everybody worrying about? This guy has power plants, he has infrastructure projects, Reliance Infra, roads,
Communication.
communication projects, metro rail, and he has a full-fledged flourishing mutual fund empire. So what are you panicking about? And we know how that story ended. So all these assets, basically my contention is that people in the stock market actually know very little or do very little research about the quality of the assets. Remember Satyam Computers? The best and the bluest breed analysts would go there every quarter after quarter, and he would draw something on a piece of paper, all figment of imagination, and feed it to them.
And the audit reports then as well.
Audit reports as well, and nobody raised a question for years about what he was doing, and was cooking his books all his while. So what sanctity does all this talk about us sitting in our offices and commenting on what Adani Ports has on the ground and what Adani Power has on the ground? We don't know much about this asset.
Let me ask a broader question to Nilesh, because he's not here in his capacity for Adani. Nilesh, thanks for being a sport and taking these questions, because this was not anticipated. But I'm coming to a broader question, and then afterwards to Saurav immediately after Nilesh. Would it be a fair question to ask Nilesh Shah at this stage that post the Adani incident, wherever there is large external debt of Indian companies, the risk premium will shoot up sharply? I'm taking this point beyond the immediate group, and whether there are broader concerns that you feel are likely to emerge.
So again, I don't think so that is likely to happen. For decades, India has received a far tighter spread compared to what its credit rating suggested. Number two, while Adani bonds are getting impacted, other Indian bonds are still trading at where they were trading before. Number three, as US interest rates have gone up and forwards have come down, the cost of borrowing in rupee market is now cheaper than cost of borrowing in global market on a fully hedged basis. There are few institutions like Exim Bank which has borrowed money in global market in recent times, but by and large companies are finding that rupee market is cheaper service global market. And to the Udayan point, when Satyam Saga opened, I was working in ICICI Prudential Mutual Fund, and you can check our portfolios. We had zero holding in Satyam Computer Services Limited. We had asked this question to Satyam management then, you show so much cash on the balance sheet, but where is the return? So it's not that mutual fund guys don't do the research. They do research. Sometimes we are right, sometimes we are wrong.
This was not intended for Nilesh at all. My point was a broader point, that all this great research which happens on Dalal Street sometimes actually misses the point completely. They are research analysts sitting in their own cubby holes in Lower Parel, and they're doing numbers. It's all Excel sheet management.
Quick point before we head across for a break. Do debt investors do much better research? I believe to some extent that happens.
It may, but you look at the behavior of global rating agencies and how many times they have got caught out in the last 20 years. I mean, they are supposed to be the gold standard of this kind of debt-oriented research. And look at how S&P and Moody's have faltered over the people have lost all respect for rating agencies at a corporate level. So, I mean, what does all this research mean? I am not saying Adani Group's assets mean nothing. All that I am saying is that once things start unraveling, they have a habit of unraveling very quickly beyond what you think is possible, and therefore it's prudent to be cautious about how much can be liquidated and what is actually owned by a corporate entity before jumping to conclusions.
Absolutely.